Hello, everybody. This is Brandon. Today is September 2nd, 2024. It is Monday, approximately 4:14 p.m. as I bring you this Labor Day shortened holiday week ahead, technical analysis, and market outlook. All right, the title is Market's been super bullish, so bullish stock market action with warning signs. Okay, that's about the truth in what we're doing. And we'll go over this chart. This is the long-term monthly chart. And there's some significant things that we can talk about this. And let's get to our disclaimer. Pause it, read it. If you agree, please move forward. So we've been having raging bull, rip your face off rally, and a lot of us know that about 3 weeks ago we had that Japan BOJ related conniption, as everybody thought that the yen trade carry trade was destroyed, and from there we had a sell-off that led into this 3+ week worth of slow grinding, kind of rip your face off rally, depending on how you look at it. And so this is bullish. The market action has been bullish, but is it really bullish? And that's the question that I want to answer. Of course, my shameless plug on x.com, Galaxydoc Market. Please visit us there. Like us, oh, not like us, but join us. Follow us, and it'll give you all of the real life commentary shortly after our members get it, and so it's something that's worthwhile in looking at. All right, so let's start with some of these news that are in the x.com or in the news cycles that I think is worthy. Don't worry, it's not going to be super long. This is pretty self-explanatory, but I need to talk about this because this is significant. This is, leading up into 2008. Obviously, we're leading into kind of 2007 and 2008, 2009, where this kind of fell apart, right? And if you can look, this was a significant unrealized losses that Lehman Brothers, Bear Stearns, practically all of the New Century, if you remember that mortgage bank, as well as Angelo Mozillo and his Countrywide mortgage crisis. This is us currently, and I brought this up, and kudos to Bobiana who posted this because I couldn't have put it any better. But this is the source from FDIC that's showing you how healthy our banks are. Despite what the Fed tells you, this is not something that's going to go away quietly, and we're getting closer and closer. You can kind of see kind of the distortions in the marketplaces that I've been talking about. You got to watch these unrealized losses on all FDIC-insured banks and institutions, and I believe it is the banks, even though they look super bullish, because they are being rescued and propped up, and this is where the dislocation and the distortion and the subsequent correction / market crash is going to come. It's not going to come in one fell swoop like in 1987 and those kind of things, but we are going to have violence followed by what you just experienced, a rip your face off rally. Now there's no more bears left. Everybody's super bullish, and this is kind of the time that you're going to be looking at where the contrarian indicators come into play, and that's what we're going to be talking about. Okay, let's move forward. And then, of course, this is super important because if you look at historically, the personal savings rate, when they're absolutely at its highest, those are really the bull markets that are leading into things. Even though we had a little blip in 2020 for you know what, right now we are on the verge of breaking down below that level. Consumers are hurting, despite what the alphabet agencies will tell you, despite what Powell says, despite what any of the pundits will say. Middle-class America, even upper-middle-class Americans are beginning to hurt. Obviously, the lower class and the lower middle class, not lower class, but lower middle class, and the poor are absolutely taken out to the woodshed and shot. And I'll show you the examples of that. And that's exactly what happens right before. We are at the calm before the storm. But right now, we're bullish, and there's no sugarcoating it. there is significant parallels, like I talked about, to the 2007 and 2009 financial crisis. And like I said, market crashes and recession is preceded by historically low personal savings rate, is a leading indicator. Okay, and if you don't believe me, just go past before the 2005, 2007, see where the personal savings rates were, and then the Fed inflates these bubbles that basically turn into inflationary pressures, and then the crashes occur. Okay, now, real quick, I'm sure you guys have seen it. If you haven't, you're going to hear it here. DG is Dollar General. Well, why am I saying this? This isn't really a big barometer of economic activity. Well, yes, it is, because Dollar General basically should be in an economic downturn doing well. Okay, and it should be doing even better during economic good times, in the bullish times. DG has fallen 68.2%. Since 2023, which was warning you that the marginal consumers are dead, right? But this is the most recent earnings release where we fell 35.1% in one day. Guys, this is telling you, okay, that consumer demand destruction is real, and there's some catastrophic decline in lower end consumer action, which is going to further put pressure onto this economy. This is telling you not everything is all right, that we are going into recession. These are recessionary problems that no one seems to be talking about. Then you have to watch NVIDIA, the darling, right? They reported earnings that was just knock your socks off great. The problem is it sold off on blowout record earnings right here, right? We gapped down and it started to sell off. This blue line right here represents the line in the sand. If we cannot find support and we start breaking down, we got gaps galore all the way through here. And it's going to come fast and furious. And we're coming into that time frame. And you just have to be patient on this bullishness, okay? It's a grinding type of market with less and less participation, with the laggards driving this rally, okay? And we'll talk about that. Here's the problem with NVIDIA. It is because I think they didn't like this. Accounts receivables are increasing anytime you see that, and I think we saw that with Enron. We're seeing that with SMCI, which we'll talk about. They have to restate their earnings. MCI, WorldCom, any of the channel. This isn't channel stuffing, but it is very, very similar. And how are they booking their earnings? We're going to find out as SMCI's saga continues, and I believe a lot of these semis and AI companies probably have adopted similar accounting practices. Something is off here, right? Now, speaking of the devil on the SMCI, we're talking about they're going to restate earnings. The last time they did that, MicroStrategy in 1999 ranked the top for the .com. Since then, we had a catastrophic sell-off, and Fed was in a tightening cycle coming into a loosening cycle, or the pivot, okay? Of course, everyone needs to know that MCI, WorldCom, and Enron was engaged in similar things around the similar time. Folks, pay attention. All right, here's the other thing. Real quickly, okay, this is the SPX equal weighted at the top right here. And then this is the SPX. Why is there a divergence forming in the negative way? Shouldn't this be going higher? Well, the problem is that leading Magnificent Sevens that's been holding up the market are now being sold off. The insiders, everybody and their uncle are selling this during this rally, which you are becoming an exit liquidity to, because I think when you look at the amount of questions and negativity that's forming in the marketplace, tells me that we are getting close to the top of this market, and this is what I want to show you. Yes, it is bullish. Yes, it's probably going to be bullish this week, and that's the message I want to say. But we're going to talk about certain things that basically will help us to identify and warn you that there is a warning. This is all kinds of warnings right here, right? It's not good for the most part. Let's look at JPY US dollar chart right here. And, it's interesting to see is that as we're coming down, we got this type of inverse reaction. However, if you look closely, we're just merely finding support right into this area. And I do believe in due time, in the next week or so, we're going to start moving, making a case above. And once this explodes, we're going to start coming down here. This is SPX right here, and this is the US dollar JPY peg. Pause it, watch it, okay? All right. So this is my Galaxy 4. Somebody told me I needed to name it. Galaxy 4 basically comprises of the following right here. I got the NVIDIA, Meta, Apple, and Tesla. And Tesla is my leading barometer for the markets. And this is this magenta line, and this decline is showing you that as the market is grinding higher, Tesla is telling you it's not all good. And then we've got basically Meta, which has been just strong as hell. It's beginning to diverge down. And then, of course, we have NVIDIA, which fell sharply, and it's diverging down. But in the meantime, Dow Industrials are diverging from my Galaxy 4, which is telling you this is the type of divergences you need to be looking for. And the Dow Transports right here by my arrow is basically lagging the speed at which in the Dow Industrials are going up, because all the laggards are being bought up. It's not being led. This grind higher, this dead cat bounce is being led by the laggards. Okay, this NVIDIA is also warning us of bigger market moves lower coming shortly. Okay, that is the darling. I don't know how much better you can do on the earnings. Okay. And Apple is stalling. Okay, Apple has been fairly bullish. I mean, it's just, just relentless because the market is being propped up by this stock. Okay, let's go quickly. All right, so this is the one that I want to talk about. Okay, this is important. Every time that you look at the significance of hitting the upper trend line has come with a significant market corrections in 09, 08 to 09. This is basically the financial crisis. Okay, we've been nothing but bullish. We found bottom right here in 2020, right at the end of March, from the what, right? Pay attention to this, pause it, and you can recreate this. This is the SPY monthly chart. This is the long-term trend line. This is our bullish trend line. These are the support lines. I believe that we're not too far away. We're at 563.66. We are in that gap. We haven't hit the all-time highs, which is 565 and change, like 44. I think we're going to go a little bit higher. I would much rather see this thing hit that top end of the trend line, because then we will be able to see what's happening. Don't get me wrong, okay? We're just going to grind higher. I mean, this is a hanging man that's formed here also, which is a bearish sign also. So are we going? I'd much rather see it, instead of stalling out and pulling back down to this area, okay, and then going higher, okay, and then tagging it. I'd much rather see it tag that into the FOMC and then break down. Okay, that's my own opinion, but this is a very important trend line. Again, every time it hits those trend lines, it's going to be followed by a bear market. Okay, bear market is coming. Here's what I do believe. I think if it's going to hit it, the top end of the trend line is 578.5 to 585. That is the top. Okay, we'll figure that out shortly. Okay, so in the meantime, we're gonna have this, low participation rate in the stocks. We're gonna have this grinding, slow melt up higher. Okay, I wish it would just go up there, hurry up and hit that, and that's your signal to short the market. But not right now. We're finally in fear and greed index. We're finally into the greed. I think we're going to probably inch more towards this extreme greed level. This is contrarian. We are near the top. There are significant dislocations in the markets that are forming. Okay, people everywhere are bullish, and bears are dead or near death. Okay. I'm not necessarily bullish or bearish. I call this bottom, not the bottom, but this bounce. Okay, we've been taking shots. Building our short positions. Yeah, some have gone bad. Okay, but that's the life of looking for the tops. Okay, the main thing is to not engage fully into this market. You want to basically be taking shots, because this can come at any minute. However, I think there's a clearer picture of where this market is headed, and so that helps us to go going forward. Okay, now We talked about this chart on the last week's video, and judging by the very low view count, nobody wants to hear me talk about the bearish side, but that is coming, and I think those of you that are watching, you'll be ready. The Fed pivots, okay? We went to August 2024. This is an old federal funds effective rate by ElliottWave.com, okay? We have record high inflation now reflected by the alphabet agencies, right? And so it's important that we understand this. And the job cuts, all of these are screaming recession, okay? When the Fed starts to cut aggressively, it means that the market is selling off, that they're scared that the stock market, which is basically the bastion of what gives them power, so to speak, okay, that's going to happen. Okay, so you want to watch this. I want to show you this because we are going higher, okay, until the Fed pivots. Now, has the Fed pivot occurred during the Jackson Hole announcement, or is it going to come on September 18th? And I'm going to talk about some important dates going forward, okay? The Japan yen crisis is not over. Bank insolvency issues. You saw the unrealized losses that the banks, not just America, it's globally that are carrying this. I'm talking about the central banks as well, okay? There's record big box retailer bankruptcies that are coming. Look at Dollar General. That is a bankruptcy watch, okay? WF is warning about shock events between now and November, especially in September. It happens to be a bearish month. Not always, but, we just got to roll with the punches. We know what we're looking for, okay? That's why I make these videos. Whether you take it or not, that's up to you. And then, of course, the jobless claims, okay, number not accurate. Okay, they revised 818,000 jobs in 1 month. Okay, all right. Of course, who believes the BLS numbers or CPI data? Okay, those are to basically give the narrative and allow the government to give you hope. Okay, that everything is better. But we know better. If you go to the shopping for groceries and look at the milk inflations, how much cars cost, gas cost, everything else, it's insane. Okay. Remember this, Fed is always late to the game, okay? So now they're going to pivot, okay? If you recall, the Fed has been hiking rates ahead of 1999, leading to the dot-com. Same thing in financial crisis. It is no different this time, okay? Okay, 2000, 2007, and 2019 to 2020. We know what happened there. So, real quick, this is from our last video. This is for the Fed rate hike adjustments, okay, in 2023. Look at all these hikes that's been happening, okay? They've been hiking for the last, 2 years solid now. All of these green arrows are hikes. This is supposed to be the last hike, coinciding with in 2023 in August. That was the last time they hiked the rates, and then since then we've been holding steady, right? Everybody's been conjecturing, are they going to cut here and there? Don't get me wrong. The market has already priced in rate hikes. Okay, it could very well be when Fed announces it. It's going to be sold a news event. Okay, rate cut language change. Is this the pivot? That's the question I'm asking for. This whole area right here is the rate cut hopes and rumors. That's what sent the market higher. It's no different. If you go back to 2000, if you go back to 2007 leading to 2008, okay, it's always the same. Okay, as they hike, they slow down the economy, they start creating that recessionary pressure, and then they blame it on an external event. Okay, and you can pause this and watch it later. Okay, now so this is, and I think we're in that parallel to the 2008 housing financial crisis bubble, okay, and the Great Recession that followed. Look at the amounts of all these rate cuts. These orange lines are all the rate cuts that happened. When the first rate cut was announced, we actually did rally for, about 10 to 14 days. And I think that's going to coincide to the FOMC, okay, because that rate cut language was telegraphed doing Jackson Hole. So we'll see. But the end effect is a gradual decline. So we got to be able to time these, obviously. Look at all these rips during that period, though. Okay, every time they can, hope, hope reigns supreme, and then whatever it is that they're hiding, whether it's Japanese yen or it's the U.S. dollar, I don't know. I mean, it's civil war somewhere, who knows? Okay, but the Great Recession came. They blamed it on the financial crisis, and then Fed started going berserk and cutting. During that period, as they were cutting, okay, it would be basically they would cut and then it would bounce and then it would come right down. It was just look at this. Every time they cut higher, and then it just went down until we bottomed in March of 2000. Okay, again, I go into greater detail on this. The reason why I'm pointing to you to this is that prior to the rate cuts, the market was bullish and heading into that other area. Remember, we kind of sold off. It's a similar thing that's happening right into this area. Okay, right here. Okay. All right, let's talk about some technicals real quick. I'm not going to go into huge detail because everyone's complaining that my videos are so long. Okay, but here we go. Well, I'm not going to spend too much time on MSI. This is my very, very trustworthy directional indicator. But since in 2008, though, we had the same thing where it was divergent. You can tell that we've been nothing but bullish up here. Is this coinciding with this downtrend line? Everything is showing you that there's divergence. Are we going to pop even higher? Or is this telling us a sell-off is coming? I think the distortions in the marketplace has basically skewed this indicator. And so for now, I'm just following it. I think the next time that it turns bearish may coincide with the time to short the markets right now. Okay. Right now, what we've got is the MACD is flattening out here. And then the MACD, however, the signal is fully bullish. Okay. And just be careful. I don't trust this indicator right now too much. The VIX. Okay, VIX is simple. I mean, we're basically in a holding pattern. Okay, we made a double top right into this area and we're pulling back. We could come presumably all the way back into this 11 to 12 area. I don't think so. I think we're going to find some support here and then we're going to rocket higher in the next couple of weeks. Okay, I'm very bullish on VIX. You just got to buy time on this. Apple. Apple is telling you something here. What Apple is saying is that, hey, we're in a downtrend line. Everything is divergent. These levels right here are potential targets, folks. And then, of course, from this downtrend line, we had a kind of a tail candle that is a reversal candle. Is Apple going to reverse, or are we going to chop around here, maybe go a little higher and then start breaking down? Apple is how the market is being propped up, folks. Okay, pay attention to this. Now, when we look at Apple, the MACD is divergent. It's beginning to kind of form that death cross. CCI is divergent. It's just telling you it's getting ready to burn downward, right? PPO-ADX, my favorite indicator, is beginning to form this bearish formation. So anything that forms something like this is bearish, right? All right, so I'm looking for that. The other thing that's important that we need to look at is that accumulation distribution. Okay, we kind of broke that uptrend line and we're going to come right back down. And then you know how I use my ATR is that if it starts to increase in the average true range, breaking through this downtrend line, then we're going to start having a change of direction. Okay, now NVIDIA, let's look at NVIDIA real quick. Let me turn this inspected off. Okay, NVIDIA has been signaling that it has reached potentially the top, right? It keeps failing at these major areas, and we're failing, stalling, and we finally, after the earnings, came down. The question is it going to get back above this level, or are we going to start getting into my primary levels where I think it's going to go? Anything below this 93 level is going to take us all the way down, and I think that's going to coincide with, in the next couple of weeks, that the market is setting up for one last push, maybe grind higher, and I think we're going to start coming down. Keep looking at this NVIDIA. NVIDIA is going to lead the way. The other one that I've been super bearish on is SMCI, and SMCI is going to have to restate their earnings, so that basically everything is bearish here. All right, And then you can use this trend line that I've drawn here. If it gets above here and then fails underneath here, that's your shorting opportunity. Everyone's thinking they missed it. No. We already gone through the first target level, which we've been targeting, right? If you remember my old SMCI videos, we're targeting this 359 to 325 area. I think it's going to go even further than that, but that's our next logical target on this, all right? The other one I'm bearish on is AZO, because if Dollar General is any indication, AZO is a major auto parts supplier for people that can't afford to buy new cars and they like to fix things, but they're out of money. All right. So the poor are getting poor, and this is what they basically follow, and not just do it yourselfers. Okay. But there is a significant pressure coming into the auto market. Okay. Basically, everyone thinks this might be bullish, but the problem with AZO is that if it can't get above here, then if it loses this 20 SMA, this is our targets, folks. I'm not going to tell you the levels. You can pause it and watch it yourselves, but I think it's coming. It's coming fast and furious. Just this week, I think it's going to be kind of choppy near that gap on the SPY, okay? And I'm not going to go over SPY levels, partly because I'm trying to save time. You guys could look at it. You know where the gap is. You know where the all-time high is. We talked about the monthly chart. I think that's sufficient. So let's talk about this concept. I talk about this every year. I've been talking about it for the last 5 years. Sell on Rosh Hashanah and buy on Yom Kippur. I would never mention this if I don't think there's some validity to this. Okay, not all the time, but I think especially market near the all-time highs, and as the Fed is changing rates, I think there's, I don't know. These people are numerological. They're very date oriented and things like that. And I think Salam Rosh Hashanah and Ban Yom Kippur has significance. Here's the thing. Because the Hebrew calendar is a little different, for the last 3 or 4 years, this came in the middle of September. For example, last year, here's the twist, right? September 15th to 24th was Salam Rosh Hashanah and Bayan Yom Kippur. So everybody that might even subscribe to this are saying, oh, it's not going to happen until October 2nd and 11th. What if it happens somewhere in between this date, 15th to 24th, which basically also coincides with what? It coincides with FOMC, right? Which is on 9/18, okay? Would their rate cut signal the sell-off, or will it sell off? I think we're going to start grinding lower shortly, okay? But I want this market to hit that upper trend of that long-term trend line, the monthly chart on SPY. If you just go back and watch it, and pay attention to this, okay? Somewhere in between here, my cycle analysis, it says that we are out of time. In the next week or so, I think there's a turn in the market coming. I think volatility is going to increase. But right now, you should only be slowly adding. If you know your levels, you should be buying puts that are long dated. Okay, you're going to get killed on the ES calls and puts and all those things because it is basically in a short range. It's churning. Remember what I always say is short. Okay, watch for the churn and then short the pops. Okay, this is the biggest pop that you're gonna get. Of course, I don't have to tell you that. If you need to do your homework. Okay, can you play ranges and play scalp futures? Of course you can. Okay, but right now the main thing is that there's a lot of warning signs that you need to heed going forward. Right? Be aware that September 18th is FOMC interest rates. Right? Rate cuts are coming, but will it be bullish though? Okay, that's the question I've been asking. I think you pretty much know my answer, right? All right. I mean, don't be exit liquidity going forward. Okay. So we talked about this. I'm not going to go into this any further, but this is the same thing. This is from last week's chart. Watch the JPY US dollar relationship in relation to the SPY or the ES. Guys, consumer demand destruction is real. All right, Dollar General, I think AZO. I mean, just keep going down the list. I'm still bearish on Carvana, CarMax, any of the car, auto, insurance, and all of those people. Okay, consumers are not doing well. We're heading into recession, and Fed knows it. They just won't tell you we are. Okay, keys to Labor Day holiday shortened trading week. Okay, as we're I think the reason why I have it indented like this, because I want you to pay attention to this. This is the thesis. Will we fail at near all-time highs in the SPY gap? If we get above the gap, markets are targeting long-term bullish trend line, which we talked about on that monthly SPY, which historically signals bull market. Oh, I said bull market, bear market upon hitting it. Okay, so let me just tell you, this is wrong, not bull. We're talking about bear, right? Bear. Okay, shame on me. Okay, all right, bear market. Okay, and I think that's what's going to happen. We're expecting slow grinding melt up 575 to 580. If that's the way they're going to go, I'd rather them hit that as fast as possible, take out that all-time highs, and then break above that gap and fill that gap, and get back to the business. Okay, this week I don't expect much. I think it's going to be a slow grinding market, just in a tight range. Okay, 565 level, right? MSI has been divergent, or has it fixed itself? I don't think it fixed itself. Okay, watching closely the JPY USD. We talked about that. All right. Okay, sell on Rosh Hashanah and buy on Yom Kippur. This year it's in October 2 to 11, but is that going to start early this year, 15 to 24? FOMC is on the 18th, mind you. Okay. All right. If they cut rates, historically, we showed you what happens after that in the next 6 months to a year heading into it. Okay. SMCI is warning the top. Did it ring the top? Okay. Volatility will expand and price action will get violent shortly. Right. Keep note of the Fed pivot and cutting cycle coincides with market crashes and sell-offs. Okay. Here's the watch list. Okay. VIX, SPY, ES, SMCI, AZO, Apple, Tesla, Nvidia. There's far more, but I mean these are the ones for you guys on the internet should be paying attention to. All right. So I talked enough. I went to 31 minutes right now. All right. So follow us at Galaxydoc Market at x.com. Like us, share us. Above all, comment, good and bad. Share, guys. My viewership is down because I keep talking about some bearish things, but it is something that you should be paying attention to right now. And let's get some alpha. Subscribe. Okay. I'm still thrilled to death that my channel of less than 3 months, now going on 4 months, has over 1,000 subscribers. We're trying to hit 1,200 right now, right? That's awesome. If you want to learn to work with me, email me, okay? Or hit me up on WhatsApp. That's where we are, okay? coachbrandon at protonmail.com. Otherwise, be careful out there. Don't do much this coming week. It's holiday shortened, okay? You have the blueprint for the next couple of weeks, all right? All right. Let's get some alpha. Talk to you later.